Now, lawmakers, CBN seeks stronger oversight amid growing fraud concerns. Nigeria's financial system is under renewed scrutiny as the House of Representatives and the central bank moves to tighten oversight of point of sales and cryptocurrency operations. The House recently set up an ad hoc committee to review POS and crypto activities following rising cases of fraud and cybercrimes, with banks reportedly losing over 50 billion naira in 2024 alone. At the same time, the central bank has introduced new rules limiting POS agents to one financial institution from April 2026, a move it says will strengthen transparency and security in agent banking. But now questions remain about how these overlapping regulations will impact innovation, financial inclusion, and the fast-growing digital economy. We have joining us now a data scientist, Harrison Obamwonyi, for more insight on this story. You're welcome, Harrison.
Thank you for having me. Thank you.
Now, Harrison, tell us very quickly, what do you make of this renewed push by both the CBN and the House of Representatives to tighten the control over POS and crypto operations?
Okay, so thank you. For me, I think it's a step towards the right direction. So this is not something new in the digital economy sector. It's just the CBN trying to create a more stringent guidelines as to how the POS sector is operating. Right. Just like what we've seen, what the guidelines have introduced, bringing on stricter, tighter eligibility criteria, and even making the agents to just, focus on one financial institution. I think by doing that, the CBN will try to introduce transparency and, of course, reduce the fraudulent activities that have increased over the years. So if you ask me, I would say what the central bank is doing, and also what the House of Representatives are doing, coming up as an oversight to the CBN, is also a step towards the right direction. As you know, that there have not been a regulation so far before. When you talk about, for example, the crypto market, it's just something that the Nigerian economy is deciding to embrace by the new act that came out in 2025 that have now, legally accept the digital asset. Before there have been some restrictions and prohibitions, but what the House of Rep want to do, and I think for me, it's something that's long overdue. If you compare this with what developed economy and even most Africa economy like Kenya is doing, I want to see issues like this that can, build trust and create transparency in the sector. Yeah, thank you.
Now, Harrison, when we're talking about, of course, let's look at the restriction and how this will impact, some of the agents. Do you think that CBN's new rule, of course, restricting POS agents to one financial institution, will enhance transparency or it will limit competition?
Okay, so in my view, I think it goes both ways. If you look at it, if properly implemented, I think it's going to benefit more in terms of enhancing transparency. But however, we cannot also overlook the limitations in the competition aspect of it. For example, when we talk about enhancing transparency, I think what the CBN is doing to just limit POS agents to one financial institution is very important. So if you look at the figures or the issues before, we see that even though we're trying to solve the financial inclusion problem in the Nigeria digital economy sector, we've also seen some abuses where agents have multiple financial institutions, and it becomes difficult for regulators to actually look into how transactions go intra-borders. It's also difficult to hold one financial institution accountable, should in the case of fraudulent or cybercrime happens. So I think what the CBN is doing is really important, if you ask me, because that will create transparency and that would also create accountability. So it can easily make them to trace transactions across board, and when you also look at some of the issues that could also limit the competition aspect is with these guidelines, it can create what I call a monopolistic reaction, because when you are limiting a POS agent to just one financial institution, the people that suffer is the smaller principal. So they will have lesser competitive, lesser competitive energy. The big players of the market will take advantage of that situation, because you talks about commission. Agency takes this POS based on what the principal or what the financial institution are willing to offer.
Right.
So the more that are willing to offer, we have a greater advantage of the whole situation. But generally, I think if well implemented, it's going to create more transparency and, of course, reduce the issues when it comes to fraud and cybercrime.
Harrison, I'd like for us to take a look at the fraud, and the cybercrimes that take place. Last year alone, of course, fraud losses exceeded 50 billion naira last year. Now, in your own view, what are the key gaps in Nigeria's digital finance systems, and how can these be fixed?
All right. So, thank you. That's a very important question. It's so sad that the Nigerian digital economy is growing really fast, and we don't have the right security or infrastructure to keep pace to that development. And just for me to digress a little bit on where we are coming from in terms of these fraudulent activities. The NIBSS in 2023 reported that over 18 billion was lost as a result of fraudulent activities. And in 2024, we are already recording over 50 billion. I mean, that's almost tripling the amount we have prior to 2024. And when we talk about the POS sector, I have actually identified three key gaps in that space. Right. And the report in 2024 have also identified this. And number one was the identity verification, data centralization, and device authentication. So what this means is that there are no unified way to track POS, KYC enforcement, so that have resulted to, falsifying accounts, creating accounts that are not really real. So what that I've done is, when you falsify an account, for example, as a POS agent, it gives room for fraudulent activity. So you are not able to verify if this account is real or fake. So you are faking accounts, and that alone has increased a lot of fraudulent activities, especially in an economy that majority of the consumers are not really educated on how to identify some of these key issues. And when we also speak about the crypto market, we are talking about consumers protection and regulatory clarity. So these are the two gaps. There are no regulatory clarity in terms of how crypto operates in Nigeria. 2025 is just when the regulators are trying to set up issues, but crypto has been ongoing for a very long time now. And the consumers that play in that market are unable to identify what is fake, what is real, and they are victims of fraudulent transactions and activities. And that have really been a key issues if you ask me, that has been going on for a while now. And that's why I particularly I'm happy with the way the CBN is going about it by focusing on the on the POS regulations, and of course, I will be expecting that the lower house of the House of Assembly is able to perform its duty. Of course, they've set up a meeting now to look into some of these issues and how they could tackle these gaps. And I look forward to seeing some, improvement in this area. Thank you.
Now, Harrison, we see that Nigeria is gradually, baby steps, I reckon, embracing cybersecurity or cryptocurrency regulations, rather. Now, can you just give us a bit of an insight onto how the government, of course, can balance oversight with the need to support innovation?
So it's very important for government to balance both, because you don't want to regulate and then you restrict innovation, and you don't want to innovate and it's at the detriment of security and safety.
Right.
One key issues that we have to realize is the safety and the trust, and when you look at what the CBN is proposing, for example, they say from 2026, POS agents will be restricted to just one financial institution, and then in 2025, the Security and Exchange Commission will be given the sole responsibility to, or to be an oversight regulatory body for the crypto economy. Now, for me, how do we balance these two? Is number one, talking from the regulatory perspective, I would say that the regulators should come with a mindset to regulate and not to restrict, just like other developed economies have done in the past. So when you want to regulate a market, you should be able to understand what the market is saying. For example, when we talk about the crypto market, you should be able to differentiate what the low risk or the high risk by using the risk-based regulation methodology, and this is what is happening in the United Kingdom right now, and other economies like Singapore and Kenya is also doing it.
Right.
So when you want to regulate, you look at what are the low risk security crypto activities, then you are able to focus a different regulatory methodology in that angle. And then you also want to look at what are the high risk, activities, and that will give you a kind of an insight on how to balance the two. And then the second aspect of balance I just quickly want to mention is to create a regulatory sandbox. What that means is that as you allow innovations to take place between the key players, you want to also be involved in the process. For example, when sectors are coming up with solutions.
I apologize, we're out of time. I'm going to have to let you go, but thank you so much for that information and insights. Very critical information. Thank you.
Yeah, thank you.